Hi, everyone. Today is Friday, March the 21st. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're going to start with the E-Mini S&P 500 futures. And what we are staring down is a market that is still in quite a bit of congestion. So we do know that we've had 4 down weeks. Yeah. 1, 2, 3, 4 down weeks, and we are staring at a technical level that suggests we could have ourselves a reflexive bounce into prior support, which may turn out to be new resistance. So the bounces right here are fairly technical. What we do notice is that with every bounce, we are doing a little bit of grinding forward. So we might feel, hey, the market's recovering, and it is, but in a broad space. It's in a reflexive bounce on the weekly chart off the 50 weekly simple moving average. So we do expect it to grind upward overall, but I'm using the word grind very specifically. Look at this very choppy range. If we stare at it from a wide angle, we can see that what we are in is inventory accumulation. Now, it is moving upward here, so we should, quotations, have ourselves a break to the upside, but not without significant dips. So here comes March expiration. We've got triple witching. They used to call it quad witching, but, they put the weekly options out in the dustbin, so we don't get to call those expirations anymore, because now we have daily expirations on so many things. So it is triple witching. A lot of volume is going to get pushed through the market. Remember to look at advancers minus decliners to see what the relative trend on the day is. Above 100, buyers, actually above 0, they're more buyers than sellers. Below 0, they're more sellers than buyers. And that will help you with flow. Notice the complete sideways action. Fails, pops straight up, pops straight down, bounces again into the overnight. And now we're trying to get back inside of that 1 hour opening candlestick formation. So here's been the trick. It's been a tough one. Last night, if we said, hey, I'm taking the opening range and I'm using the low of the candlestick, that's 57.06 and a quarter, then we have a really big stop, right? And so if you took this trade long, you're going to get stopped out. If you took the trade short, as it fell back into the region, you're still in really good shape, because what did it do? It failed the high of yesterday's opening 1 hour formation and has almost touched the low of that 1 hour formation. But this is certainly a place, as it recovers outside of yesterday's box, it's certainly a place to take profit. And, that's 20 points in the ES. Today, we are looking for deep dips that find buyers. The 200 is all the way down here at 56.28. We are in a broad area of accumulation, and so we could easily see it fade. I'm looking for the deep lows to be buying, so I'd love to see it come into 56.32. That's where I've got my action sitting to look for long in the ES. All right, now let's say it breaks out above this 57.19. I would go long, but only after it comes back in and then holds a higher low. Not like last night, that came straight back in, bounced, and gave me a lower high. And so this area, there are a couple of trades. You could take it right off the bat. As it closes inside the candlestick, use 57.19 as your entry, and your stop would be just above the high of those candlesticks. That's 57.25 or so. Bounces should, in quotations, bring us into accumulation areas that are in the deeper support action event. If it breaks out, we know the trade to take. It's already broken down, so we want to see it confirm the lows and fail to get into 57.06. That gives us the short trade, and we must immediately see it come back below 56.96, and then we'll stair step it into 56.80. Looking at the NQ, same sort of thing, wide area of accumulation. The traders that are making money on the swing side are waiting for these lows, getting long, and waiting for the highs and getting short. Now, here's the value area, and the high value area is 830. That's where we're battling right now. Yesterday on Power Hour, I bought this 19,830, expecting that it would move to 950, but it only moved to 920 or so, which I clipped my gains and I was out. All right, we are underneath the low. Notice again, same sort of thing, breaks out. If you took the long and you had 1880 as your stop, did not work very well, but 30 points of risk. If you use the tactic of, hey, listen, I'm buying it, but if it pops back in here and I test either the open or the close of that candlestick that held the open, your stop might have been a little bit smaller. But the failure to test, remember, the stop is usually the width of the candlestick, right? So the failure to hold 880, 915 was the stop. Nice short comes inside of the low of the opening range of several days ago, and then again into the low of yesterday's Globex range, but not quite at it. So it holds 730 as support at this juncture. What's the trade? Well, I'd like to see it bounce back into the Globex low candle, open at 880, begin to fade. That would give me my first short. 820 would be my first target, and then 730 would be my second target, and I could trail with the rest. All right, trend is down, momentum is down. Highs, there are higher lows, so this chart easily could break to the north. Where would we go next? 20,075, 20,100, 20,200, and then they're going to sell it again, right? This is the land of exit liquidity. Every big spike into the areas, the spikes have been huge. Sellers come right back in and sell it off. That is what is happening. Looking for another test of 19,390 to really sort of recalibrate what the whole market is doing here. Because if it loses it, we've got ourselves a beautiful dip down to the 19,000 area. And if it doesn't lose it, but it holds it, you know, we've got ourselves a 500-point move to the north, though it might take several days. Let's take a look at the YM. Same sort of thing, sideways action, failure of the low of the opening range gives us that first test into, you can look at prior resistance, you can look at the range of the opening Globex. Those are the two things to really watch in my mind. Retest of the area reinitiates another entry into the short. Where are we going? Here's the first target, the high of the prior day's open. The next target, 42,000. Could the traders lift off of this zone? Absolutely. Absolutely they could. The long initiates again if we get up above or really into the candle, into the original candle, but you're going to have to look at tight time frames to see what's going on. Breakout above this area that holds above the high is going to bring a short squeeze in. That'll send us to 42,400. 42,600. Next liquidity area is all the way up here at 42,900. Let's take a look at Bitcoin. Bitcoin, same story, right? Here's the range of accumulation. It's pretty big. Gets out of the range, distribution at a discount, immediately gets back into the range, right? So what do we notice here? What we notice here, the breaks down, relatively short-lived. The breaks out, relatively short-lived. So what does that tell us? If we buy the breakout, We must look for a near-term target where we can clip and take our products home, right? We take our profits home. If we break through the value area low, heavy congestion, we take the short, but prior support is going to get us out of that trade. Just like the broad market, Bitcoin is measuring liquidity here. Just like the broad market, we are making higher lows, could be a breakout, but this is not a buy and hold environment. Exit liquidity is taking every new high and selling it off. Okay, so where are we this morning? Well, we're caught in the slosh. We are sitting right inside of our opening range candlestick. So what's the trade, Anne-Marie? Well, buying the bottom of the candlestick in a sideways formation like this tells us we're likely to get to the top of the candlestick. So if you said, hey, I'm going long, your first target, 84,615. The problem with hanging on to a trade like that is that the overall motion in tighter formations, this is an area of accumulation, right? So they're going to distribute at a discount or at a premium. And if I'm underneath my 50 and above my 200, and they're both relatively flat, it definitely means that I don't need to hold this for a long period of time because it will ultimately break down and do something else, right? This last area of accumulation resulted in a distribution at a discount. Will this do the same? Potentially. And then we move into 82,610. So above us, 86,705 to 88,000. Below us, 82,600 to 81,000, and then 80,000. See how it's bunched up right there? They're just moving it sideways. Nobody knows what in the world might be going on. We really don't. It's just sideways. That's how we trade the market when we don't know what's happening, right? When we don't have a convicted idea about what's going on, we trade sideways. Oil is still in the same space. Look, value area high, 68.30. I said the other day, I said, hey, listen, 68.50, probably top of the range. We did have 68.70, but now we have a double topping formation. What is this? It's an accumulation. Could it hold? Absolutely, it could hold. Anything could happen. We have an upward sloping 50. We're above the 200. We're at the bottom of this area. But the broad formation says, listen, I should chop in this range. So where's the great trade? The great trade is wait for it to come down and get into the 1 hour formations of several days ago, maybe 67 or, I don't know, 66.80. And then we'll be off to the races in another long. But this is definitely a very sideways rotation. This middle action is going to make for a very sticky and ugly trading event. Let's take a look at gold. You know, I believe that gold is in a topping formation. It's done that, right? This is a formation that I like to look at if I'm shorting something. This is a look above and fail over a longer time frame. You can also go, wait, isn't that a head and shoulders pattern? Potentially. If it is a head and shoulders pattern, there's $30 of motion potentially, which was put us right back at the 3,000 zone and get through this thin volume pocket. My thought would be if this is the one shoulder and I have the head, this is the look above and fail, then I look for the shoulder event to short. Happened to come in the overnight. What was that? It was the opening range formation that started, pushed out above it, right? So you could have taken a long. It would have stopped you out for 2 points or so. But then it completely breaks the short side. And so 3,050, that would have been the shorting formation. And look at what it did, right? Absolutely bonkers move to the downside, flashes through everything. For us, I put in the chart yesterday, listen, 30.33 looks like the target area. That's $20 of motion. That's a heap of cash. Now, look at what it did. Here is another look below and fail, but what we need to do, if this price action is going to move up, it needs to pull back and hold the floor at 30.36. That would give it this kind of shoulder event. What do I suspect? I suspect we're rotating over. There's too much gold news for people not to use it as exit liquidity. That's how the media cycles run for deep pockets. They go, oh, well, that's hitting the news in droves. It's time to cover. So I suspect we get to 30.50 and we cannot get back into that opening range candlestick, or we get to 30.48 and it gives us some downside pressure. 30.26 to 30.14 and eventually that 3,000 level, if not lower, to be honest. Here's SPY. What are we doing here? Oh, my goodness. First of all, you can see we're in an accumulation space. We came to the bottom of the box. You know, this chart is one of the few ones that say, all right, if it dips into 561, this looks like a potential buy, right? You're like, what are you talking about? The 200 is down. I'm under the 50. The 50's kind of sloping. Why would you think about a long right there? Because we are in an accumulation space and they're going to come in here and try and buy it. Now, could they absolutely fail? Yes. So where would your stop be? The low of the opening formation from prior days. So $560.60 should be the floor. The pullbacks into 561 should, quotations, should be the buying area. I don't really, when we come into the trading space, the only thing we need to think about is, where do I lose money and can I make that as small as possible? As small as possible. We don't have to be right. Small as possible, right? It's down here, right here. You get out of the way if it loses this $560.60. Qs. Look at how landlocked this is. Mercy, right? Recalibration, redistribution, rotation, all those things that we're hearing across the news cycles. Big sideways action. Two areas of distribution, but they accumulation, but they overlap each other. This morning's price action, the low is 476.74 and the high is 479.05, and we are caught dead smack in the middle of it. It is almost $2.50 wide, so there is that. But this is ugly. I would zoom out and go, bring it to me here. Give me this lower level of distribution, or let me break out of the box and I'll go to this area of distribution. Everything is suggesting to me that this is sideways chop, unless I am near the highs, which could be higher than yesterday's high, or near the lows, which could be much lower than yesterday's low. I am not touching this unless it is way deep or I'm trading it on a very tight cycle just to scrape some pennies off the board. All right, folks, that's it for me. Visit me on Top Step TV between 2 and 4 today, I think. You can see me on the Benzinga Show at 11. And, of course, every other week I am on Serious Business Radio from the Wharton School of Business with Janet Alvarez. All right, folks, take care. I'll see you soon.